Alrighty, welcome to the Get Wealth Podcast. My name is Brennan Wiersma. Please be sure to like and subscribe if you haven't already. Today I got a very special guest here, Cole Grindie, stock exchange expert.
I won't say that, but
You've had quite the success. So how did you get started in stocks and investing?
yeah, so I first started probably when I was a sophomore in high school. I mean, not investing wise, but starting to get into it, look into it. My dad used to do it, back in the day. And then he kind of got scared off. He had his own little scare for that. And but I started looking into on YouTube, and started looking up Warren Buffett and some other financial guys on there, and just got super intrigued on it. I was doing firewood with my dad, and we'd always talk about how to make some more money doing something other than labor work.
Yeah.
And so I looked into stocks, and I was like, that's something pretty easy. I mean, I can get into with hardly any knowledge in it. Money, I just started building over time, working firewood, working labor jobs, and I started adding to my accounts, and I started watching more YouTubes. I started researching companies that I liked, and started figuring out fundamentals on the company, how did they make a profit, why did they make a profit, all that kind of stuff. And it's just how my brain's wired. In school, I've always been more attracted to history, marketing, and just economic math. I hated regular math, but economic math, it just clicked.
Really?
So I've always been kind of attracted to it.
Okay, so what did you do, or I guess up to this point even, what have you been doing as far as making money to be able to invest it?
So part-time work, I'd say, with firewood with my dad in high school, and then I moved up to a Boys and Girls Club. That was my first job. I think I was 17 at the time, 16, 17. And then I had a buddy that had a summer labor job for the city of Everett, and I worked that job 2 summers in a row. So that was my first real job. And then I moved into a kind of a vendor cooking job for Facebook in Seattle. And then I did that for about a year, got to know some other vendors around, and I found a vendor that was offering twice what I was making, and I was like, can I hop on with you guys? And then so I was doing that for about 2.5 years. And with all that money that I was making, I was putting majority of that money into my brokerage account, relentlessly. Every month I was putting as much as I could in, and just researching stocks. That was my full-time job, as well as what I was doing for work. And
Really?
so, yeah, I've just been doing that ever since, is building that portfolio up.
So you're really self-taught.
Yeah, I mean, my parents weren't literate in that field. My other extended family members weren't either.
Mm-hmm.
No one that I really knew was into that, and so I was like, okay, I need to teach myself. And so in school, I'd learn about different people, how they made money and whatnot, but then YouTube is the place that I really learned. I just zoned in on Warren Buffett, his teachings, some other value investor teachings. Found this guy, Financial Education, Jeremy, I watched him since his first YouTubes on YouTube to now he's the top of the top in the financial field in YouTube. So he taught me a bunch, and we're kind of aligned. And so for me, I found mentors on YouTube's platform.
Yeah.
Instead of going out and searching for people in real life, these guys were actually teaching valuable lessons in the YouTube space. And so I thought that was my route. It's I need to learn this way, and then I'm going to implement their teachings into real life, into my life. Yeah. And so that's what I kind of did. I mean, it's been, I think, 7-8 years now of just learning and learning and learning. So now I pretty much have a good view on investing and what I look for, at least.
Yeah, that seems like there's so much information out there that you really just got to know where to look.
There's so much.
With Jeremy, is that what you said his name was?
Financial Education, Jeremy, yeah.
Is his last on Instagram, is it Buckner?
No,
I
that's
follow that guy.
that's a different one. Yeah, he
Okay.
he came like a year or two after, so he's only been on for I think like a year and a half.
Okay.
But he's a good one too. He's just a normal guy. I think he's an engineer or was an engineer. Then he decided to go financial YouTube wise, and then he just started his own channel and started talking about money. And yeah, he's doing well for himself.
Yeah, I remember you reposted one of his Instagrams, and he was like talking about how YouTube was able to make him.
Yeah.
I mean, maybe I could talk to that guy, but
yeah,
he
you can
seems
try.
like one of those people who, in this similar way that you did, just took it into your own hands and figured it out.
Yeah,
So.
I mean, I think everyone can go on YouTube, search whatever they want, like within any sector they want to learn, any field they want to learn. I think YouTube is like the platform. Like I think college is going to be just obsolete because YouTube they might just create their own YouTube university.
Yeah.
I mean, they already kind of have it. It's everything you want to learn is on YouTube.
Right, you can get the equivalent
Yeah,
knowledge-wise.
or even more.
Yeah.
I think even more.
Uh-huh.
And so that, like for me, I went to college, I think for about a year and a half. I was doing sports nutrition, and I actually did an internship at UW. And I just thought to myself, it's like, I hate school. Like, this is not what I want to learn. And I just had this internal fight. And I was like, nope, I want to do finance, but I need money, so I'm going to work. So I worked and worked and worked to add up to my, into my portfolio. And I'm just going that route because I don't want to be doing, nutrition. I want to be doing kind of like what I want to do.
Yeah, because there's one thing to work and invest your money, but there's another thing to make your career investing. Would you say that's more where you're headed?
Probably, yeah. I'd say that. I'm in early stage investing career, that I'd say.
But early for you is probably where people get to in years of work, right? So I guess how much right now are you invested in the market?
With everything, I'm probably I'm over about 160,000 as of right now.
Wow.
Yeah.
That's some big numbers there.
Yep.
And how quick has that been built? You said seven or 8 years?
No. So I started learning in high school. So I didn't really put any money when I was in high school. But when I hit about 18, 19, that's when I started like putting whatever I could. I wasn't making much at 18 or 19 or 20. And so I just put a little bit at a time. But once I started to get that last job, that last vendor job I had, that's when I just went balls deep in it and just put as much as I could. And yeah, I've grown. I've doubled my money I don't know how many times now. So like this year when the pandemic hit, my account went down to 60 or 70,000
from 160.
Mm-hmm.
Whew.
No. Oh. From 110. It was at 110. It went to about 60 or 70. But I sold some positions that I shouldn't have sold, but and looking back, I made a lot more on my money. But yeah, I turned that 70,000 into 160,000 just this year. And this month is my biggest month. I made about 30 grand. Yeah, I made about 30 grand this month.
Holy smokes, dude.
Yeah.
And within your portfolio, it's just the accumulation of every single stock that is equal 30 grand, right? Your whole portfolio has increased by that much?
Yeah, with everything.
Mm-hmm.
Yeah, so I have my main account. That's the one you see on my Instagram. And then I have my Roth IRA, and I have a traditional IRA. So I have 2 retirement accounts. Okay. But my main account is the one I post about.
Okay, so I want to work my way up to getting to where we are with that number. So you started out just researching on YouTube.
Yep.
So say someone watches this and they want to start, they pause the video and they want to go start.
Yeah.
Where first should they look to go learn just even the basics or really how or what it's all about? Like how did you go about getting started?
Well, I think you should start out with Warren Buffett. I think his teachings of value investing, finding companies that are undervalued, that have a product or service that everyone needs, and you buy them at the right price. And so I think people should start with that. Unless you want to go in inactive way, so you would be I'd say passive investor. So you do like index funds or mutual funds or whatever, but that's passive. So that's not. So what I do is active.
Okay.
Active investing, and so I'm like constantly researching like every single day, like hours a day. But I would say start with Warren Buffett. Learn how to value a company through his eyes, and then once you learn his techniques, go to other financial YouTubers' pages and think about what they're doing and implement that into your life. So it's like go to Financial Education Jeremy and just go down how he views a stock. And then you can determine like what makes sense in your eyes. And so that's how I like would do it. Say he mentions a stock and then he gives like points why he likes it. You got to go on your own time and research that company as well.
Yeah.
And it's like, okay, this makes sense. He's right. This product is like soaring. I might have to get in, follow the trend, So I would say, yeah, just go to Warren Buffett, kind of research what his ideals are and how he invests and how he picks companies to invest in. Yeah. So that's where I'd start.
Okay. And is that so? Warren Buffett, do you find that in books or is that on YouTube?
Warren Buffett gives a lot of interviews. Okay. So I would say just go on YouTube and listen to his interviews. You can find thousands of hours of him talking over 50, 60 years. Yeah, and
it's for a very new person. Are they going to be able to digest that, or are there words and definitions that they might need to?
Yeah, there's some terms. I mean, you'd have to know, but overall, he gives us generalized points of like how he views like investing.
And you can kind of
decipher, or you can if he says a point or a term, you go on Google and just research that term. And so that's kind of like what I did. As a young investor, I was like, okay, what is he talking about? What's his term? What are fundamentals? Like, what do I need to learn on a balance sheet?
Yeah.
I just go on Google or Investopedia. I would go on Investopedia and then just look up terms of whatever you want to know. And that's kind of how I just accumulated this knowledge. I'm like, okay, I'd just Google that, Google this, and then you can figure it out.
That's awesome. And, okay, so once you've figured that out and you kind of know a little bit about how to get your feet wet, as far as brokerage accounts and where specifically to invest it, do you do it into a Roth IRA? Do you have just a normal broker account? How do you go about doing that as a beginner?
Yeah, so if I was a beginner, I would just set up. Well, first I would have a Roth IRA. Just I think that'd be my first one, and just max that out. You can put $6,000 a year into that, and so what a Roth IRA is a individual retirement account.
Yeah.
And so a Roth also is tax free when you retire. So all the gain, you can make $1 million on that account, and that's all tax free. So that's why I like that. So I'd do that first, and then I'd open up like a Fidelity or M1 Finance, kind of a brokerage account.
Yeah.
And what a brokerage account is, it just is a housing for what stocks, what companies you buy.
Yeah.
So they're all pretty much the same, but some platforms are better than the others. I mean, it's not really a big deal.
Yeah.
But
and you could open a Roth up within.
You can, Roth is just a retirement account. Like all brokerage housing companies offer that.
Yeah. For
the majority of the time, I don't think Robinhood does, but yeah, I think majority do.
Okay. And you made a YouTube video on the Roth IRA. I'll put that in the description so people can go learn more about the benefits and everything that goes into that. Okay, so you would recommend getting a Roth IRA for starters?
Yep.
Okay.
Yep. So once you max that out, just go into a regular tax brokerage account.
Okay.
Yep.
Because you can only do $6,000 a year or something right now, and then. Okay.
Yep.
Beautiful. So when you're looking at a stock, how do you know what stocks you want to buy? Do you go for the larger companies like Tesla, Apple, or are you looking for more penny stocks? What's your perspective on that?
So when I go search for a stock, I'm looking at what company is undervalued at the time. So if you're looking like a large cap stock like a Tesla, you want to buy them like 50% off. You want to buy when they're going on a downtrend or on a red day, a big red day, big sell-off. You want to find a company that has a product or service that everyone needs and that's not going anywhere. Mm-hmm. So say like Coca-Cola. I mean, Coke's not going anywhere. People are constantly going to buy Coca-Cola.
Right.
Or service, a platform like Facebook. Facebook's probably not going to go anywhere. They own the Facebook platform. They own Instagram. They own just a bunch of other stuff. So that's kind of like what I look for. And I'm looking for trends. Is there a big trend happening? Mm-hmm. So like right now I own the stock called Very Good Butchers, or the Very Good Food Company. Yeah. It's based in Vancouver, Canada. Okay. And they are part of the vegan trend. And so the vegan trend on a year-to-year basis is growing 14% a year for the next 10 years, projected.
Why is that?
Well, people are moving away from regular meats.
Is that a good thing? I don't know.
Who knows? I mean, it could be. I mean, they got multiple points on why it could be. But, they just have a product that everyone likes. And it's, whole food based, and people are just, they keep eating it. And they want to get a part of it. And they're growing at like 100 to 150% growth a year. So that's kind of like a stock that I like to see. So, and it's super small. It's only like a I think it's like 330 million as of right now, market cap.
Okay.
That's a very small company. So like Tesla is I think it's like 550 billion.
Wow.
Yeah. And think of like a Very Good Butchers, that's growing at 100 to who knows how much percent a year, just massive growth. And that's able to double faster. So like my best stocks, market cap wise, I range from 500 million to about 15 billion. That's like my sweet spot of how I can see trajectory growth, mm-hmm. and I can double my money faster. So like say like Warren Buffett's company, Berkshire Hathaway.
Yeah.
That's at about 550 billion. You can't double that every single year. Yeah. It's going to be hard. You're going to average maybe like 9%. But with a smaller company that has good products and good leadership, you're able to double your money fast.
Because they're doubling in size, they're getting new buildings, they're opening up new
distribution, they're getting more people aboard, they're adding more international, and they're growing more products, they're acquiring businesses. So that's what I kind of like in a business, in a stock that I want to own.
And that's almost a little more fun, because everyone knows Tesla's going to be Tesla and keep going to space and planting chips in our brains. But, a new company, you kind of are the one saying you put in your trust and you think you see something in them and you can invest in that company. Like you really feel like you're a part of that process. So Very Good Butchers, how much is that worth? And is that like a penny stock? And then
like a penny stock would be between like everything below $5 is considered a penny stock. But it's a company that is growing and is showing good leadership, mm-hmm. and so that's a company that I think a lot of people should own. Is because it has good values, good morals, leadership is growing the right way. There's no false reports on things. They're not doing scammy stuff, but it's a small enough company that you're able to invest in at a good price and that you can hold for long term. And so that's kind of like a company that I'd own. Or you can have like a Celsius. What also I own.
That's awesome.
Yeah, that they're a $2 billion company, and they're projected to grow about 100% this coming year.
Really?
And so that can turn into a $4 billion, and then you double that into an $8 billion. It's just easier to double. It's faster growth.
Because you can see if they're a much smaller company.
Yep.
Okay, so I guess looking for those lower...
The gems?
Those smaller ones. Yeah. How do you find the Very Good Butchers or the companies that might be showing more promise with growth?
Well, I mean, for me, I'm always researching companies, and so I'm always looking at screeners on, like, say, like a Yahoo Finance.
Okay, sorry.
No, you're good.
Making sure it was working.
So you can do like screeners on like Yahoo Finance. So you can pretty much like filter through all the companies that are in the market that you can invest in, public companies, and you can figure out which companies that you'd want to buy, like how big the company is, what their growth rate is, how much cash they have. You can screen for all that on Yahoo Finance.
Really?
Mm-hmm.
I've never heard of that. Okay.
And so you just go through all the companies and you just look into them. I click on this one. Nope, it's got a bad balance sheet. It's not growing right. Leadership is kind of subpar. And then you go to the next company. And it's like, oh, okay, this actually has a good product. They have a good brand. They're growing. Their leadership is there. And, that's kind of the company I'd want to invest in.
Mm-hmm.
And so there's the brand, there's the product or service, but I'm also looking at the balance sheet. So it's like, okay, how much debt do they have and how much cash do they have? So you always want to have like at least double the amount of cash than debt,
mm-hmm.
if any debt. If you can find those companies, that's a gem. And so I own a marijuana company, real estate company, that basically buys and does a sale leaseback to cannabis companies. So they buy the land. They're like a third party because right now cannabis companies can't get a loan from the bank traditionally because it's illegal federally, which hopefully in the coming years will be legal.
I'm sure. But
so what they do is they buy the land and they lease it out to the cannabis companies. They pay them like 18% a year return on their money. And they have zero debt on their balance sheet.
Whoa.
Yeah. So that's kind of like the company that I want to see, and I want to invest in because it's growing. I think this year it grew at like 100+%, and it's only like a $3 billion company. So you can definitely double that easier. So it's just a game of doubles, pretty much.
That's the key factor you're looking for is the potential for it to double.
Mm-hmm.
And what time span is that usually? Because if
varies.
you're doing it within like weeks or days, that's day trading. That's a different thing. You're going for you want to buy something and have it for 20 years.
Day trading's like you buy and sell on the same day, and you're looking short term.
Mm-hmm.
Swing trading's like weeks to months that you buy and sell. I mean, I do that occasionally with companies that are trending. They have a certain trend or they're at a certain price. So say like I bought Wynn Resorts, Las Vegas casino.
Yeah.
And they hit like a rock bottom of like 70 a share. I was like, okay, I've seen it at like 150, 200 before. They're a solid company. Looked at the balance sheet, solid. And then I saw them at 70. I was like, okay, I'm buying that like right now. And so far they've gone up to about 102 now. And so I just bought in at that price, and I'll hold it till they go up to 200 and probably sell it. And then they'll probably come downtrend again. Then I'll buy and sell. It's kind of like a swing trade for me, but majority of my investments are long term. So like 1 to 10 years.
Yeah.
Yeah.
Because there's a statistic, I don't know who actually found it, but I'm sure you've heard of it. It's like 90% of people fail timing the market as far as trying to buy and sell when it's low, and you're much better off buying and holding it for longer than 20 years because that's shown to have at least.
Yep, and just buy on the red days.
Yeah. Keep
lowering your cost bases as much as you can.
So it takes a little more skill to be able to do swing trading and day trading, would you say?
I mean, if you're in the market and you know what to look for and you've seen it time and time again, the price fluctuates, mm-hmm. and you've seen it hit certain prices and go down to certain prices, but then it bounces back up, or they have a certain trend that's coming up, that's when you probably swing trade. I mean, it takes a little bit of skill and a little bit of knowledge and remembrance,
mm-hmm.
but I mean, I think anyone can do that, in my opinion.
Yeah.
Yeah.
Okay, so this Yahoo Finance, that's where it shows you a lot of these. Is it mostly startup companies, or when do they get on there?
No, Yahoo Finance is that's like the go-to for like all stocks. Okay. So it tells you all the information about it, their finances, what analysts think, or what their company is about, and related stocks. You got that too. Seeking Alpha is another one that gives you like information. This is another like news source.
Yeah.
And there's Motley Fool. There's other ones. The Wall Street Journal. That's a good one. There's just a bunch of news sites you can have.
Yeah.
But yeah, if you want to learn like on a certain company, I just type in Google, just type in the ticker, so the abbreviation, the stock, and just look news, and you'll just find whatever news you want to hear, what press releases the company, releases.
Okay. And so then just to kind of close that point you were talking about earlier, when you're researching the company, you said you want to see how much cash they have and then how much debt they have. Are those the two big factors, or anything? What else do you look for?
Yeah, so there's like 4. So definitely cash and debt. I want to have way more cash than I do in debt, or current debt and current liabilities. That's what you're looking for. And then I also want to have the company have a good product and or service and a growth rate that's, beating everyone else's in the same sector. So say like this vegan company has a 20% growth rate for the year, and then this other one has like a 50%, and their balance sheet and their brand is better. I'm going to buy that one. So that's kind of what I look for. Yeah.
How long does that take you for one company to find all that information?
Pretty fast.
Oh, really?
I mean, I could probably do it in probably like a couple hours. I mean, just looking news-wise, looking at their fundamentals, their past like earnings, and so that's also what I look at is earnings. Every public company has earnings every 3 months, and so that gives you insight to what the growth rate is for the last 3 months, how much cash they're burning or receiving, new investments, what they acquired and whatnot. So that's a big one that I look into. I'll go like 2 to 3 earnings reports back and just see that growth trajectory, and then I'll make a decision off that. Yeah.
And you said you spend hours a day, pretty much most days.
Every single day. It's like nonstop. So.
But that's
it's just what I like to do.
When you enjoy it, it's not work. It's fun.
It's play, yeah.
And it's filling up your pockets, so that's an added bonus.
Yeah, that's definitely a bonus.
It might be part of the reason why you like it, but it seems like the buying stocks and trading is difficult for a lot of people. I mean, more people would do it if it was easy to do what you're doing. Where do you think most people fall short when buying stocks? Like, what's the biggest reason?
Lack of information.
Really?
Yeah.
Okay.
Like, I would say people are just afraid of like, they hear all this news, like someone lost this amount of money, this person got scammed out of this, or the market just sold off. Oh my God, panic mode. It's not all about that. It's like you can find a good company in any market. You can find a company in a bear market. So I mean, it's a super bad market. You can buy a company and make money off it in any market that you want. You just got to know the kind of company you want to be in. You want to have all the factors in line, and then you're good. Just hold it over, months to years, and you'll make money. No problem. Because the market generally just goes up over time. I mean, every 10 years statistically, the market has a sell-off, and then people panic. But it's foolish because the market always goes up. Yeah. So you never sell. You want to buy on red days. Right. That's the way I look at it.
It's everyone hears.
It's just going to a sale. It's like 15% off this day. Oh, it's 50% off that day. Okay, I'm picking that up. Thanks.
Yeah.
So it's like.
Yeah, and everyone knows buy low, sell high. You hear that constantly, but what generally tends to happen is they don't think about once they already have the stock. Everyone's so emotionally driven because when they see it drop, that's when they want to. Oh no, I don't want to lose any more, and then that's when they end up doing the exact opposite: is you sell low.
Yep, they just get scared, and that's like where like the view of money comes in. It's like money is a tool. It's going to come and go, so you shouldn't be emotionally attached to it. That's the problem most people have is because they're emotionally attached to it. It's like, oh, what if I lose this money? It's like, no, I'm going to use this money as a tool to build me more money. And if it goes down, okay, I'll find something else. I'll make more money. Okay, it's not a big deal in my eyes. Like if I have like what happened in the crash this year, it's like okay, I'm gonna buy more, and I've doubled my money so far off that. Just that ideal.
That's crazy. $30,000 this month too is
Yep.
That's a big number. I mean, if you keep that up, I mean, not every month is going to be like
No,
that. But if
no.
you were to continuously get those returns, man, you're sitting pretty with that.
Yeah, I call getting some home runs. I need to keep building my home runs. So everything that gets over 100%, that's a home run. So
Okay.
I just got to keep finding those.
How much of those How much of that do you reinvest? You're earning
Everything.
100%.
Everything. I don't take any money out.
Because some people, when they get a $30,000 payday,
They go and buy like
Their
a Tesla or
monkey brain want now.
take it out.
Yeah.
No, I keep everything that I make in, and it's just a lot of compounding. I mean, I'm just gonna create more wealth, make money on top of the money I made, on top of that money. So it's like just ripples.
How old are you right now?
I'm 24, just turned.
Which is probably the youngest person ever. Like 24 years old, you're going to do this. I mean, I don't see a reason for you to stop.
No.
And that's just going to keep building, which is scary to think about where that goes if you're doubling your.
I mean, I'm hoping
portfolio.
I'm hoping to get to the $1 million mark in my 30s. I'm hoping.
Yeah,
I mean, the
too.
rate I'm going and the consistency I'm having, it's just going to get better and better and better. And so I think in my 30s, it's going to be pretty good for me.
Mm-hmm. Nah, I 100% believe it.
Yeah. So.
Yeah, that's so cool, man. As you grow, I really do think you should start a YouTube channel. Or, I mean, you have one, but just like every day, because dude,
consistent. Yeah.
Every time you post one, I'm waiting for it. So.
Yeah, no, it's in the works, so it'll be there.
So, as far as your portfolio, the majority of it, would you say it's more penny stocks or companies that are on the come up, or have you?
I have a mix.
Is it like 50-50 or just?
And it depends on what account it is. Like in my Roth retirement account, I got companies that are not as risky, but they're still growing. But in my main account, I definitely have like the riskiest I can have.
Yeah.
Small companies that who knows where they're going to be. But yeah, I have a mix of all market caps and all different kind of riskiness. But I do have safe ones in there too, so I'm solid.
You buy index funds and
I don't. So that's the one thing I don't, is because that limits my return. Because like you can get an index fund that's averaging 10% a year, but it's that mimics the S&P 500.
Yeah.
Like a SPY. SPY is like the smaller version of the S&P 500, and that only averages like max 10% a year. I mean, some good years you're looking at like 15-18%, but you can make way more than that on individual stocks. So that's what I like. I'm nowhere near that. Mutual funds, I'll never invest in those either.
Because you don't want to pay the fees.
The fees are terrible, and most people have 401ks, and so that's what I don't like. It's like these people rip you off because even when you're not returning money, getting a positive return, you're still paying them to give you that negative return. It's like, doesn't make sense, and you're paying hefty fees. I mean, I like Vanguard's index funds. That'd probably be the only index funds I would have, because they only have like a 0.08% fee instead of like a 0.5% fee for mutual funds.
Yeah. Okay.
And so, but I mean, that's a passive investor. So that brings me back to like, do you want to actively invest like I do and research all the time? Or do you want to have your money grow at 10 to 15% every single year without doing anything and just constantly just putting money into that and not worrying about it? It just depends on what kind of investor you're going to be.
It kind of seems like with being an active investor, I used this analogy before, but the ceiling, there's no ceiling. You can find a company and it could be the next, or you find the next Bitcoin and you can make all this money, or you can really make some bad decisions and make no money or lose money, which takes a little more diligence and studying, whereas maybe that passive investor doesn't have to look at it as much, but you're not going to get quite as good of returns as like doubling your money every single year. So it really does take the
it's going to take you way longer to double your money in index funds than in regular stocks.
Yeah, but having it in an index fund is better than just keeping it in your checking account.
Very true. Very true. You're getting nothing off that.
Yeah.
Even bonds. Bonds are not a good choice whatsoever right now because bonds are at the lowest they've ever been percentage-wise on interest.
Yeah.
So, I mean, yeah, if you're going to passively invest, do Vanguard index funds. And then if you're going to actively invest, you're going to want to do, good growth stocks.
Yeah.
Yeah.
What are some of the bigger companies that you would recommend people buying on a low day? Would you just say just the ones that everyone kind of has in the top of their head already? Like,
well, I mean,
Apple.
if Tesla went back to 300 again, I mean, I'd buy that like right then and there. Square, Costco, all the 5G plays. Definitely vegan stocks if you can find them, like Beyond Meat. If that goes down to $70 a share, buy that up.
Mm-hmm.
But I see Square, and I see even Amazon, all the tech companies, Facebook. I'd buy all those on a big sell-off.
Mm-hmm.
All those.
Yeah, those are all not going anywhere
No.
anytime soon.
No.
Okay, so you mentioned a few.
Yep.
But the brokerage accounts. So you said Vanguard. What are some other ones that people can go?
Yeah,
to
if you're gonna do passive investing, I'd do Vanguard and just invest in their index funds. Robinhood is okay. I mean, they're all pretty generic, but I personally use Vanguard. That's my Roth. I use Fidelity. It's this easy platform. There's a new one, M1 Finance, which is pretty good. They got some good things that you can use to organize your money and whatnot. Other than that, I mean, they're all pretty much the same.
Yeah. What do you think about, you just mentioned Robinhood
Yeah.
and companies like, you always see the ads for Acorns. And do you buy into that, or is that kind of a waste of time?
I mean, yeah, it's kind of a waste of time. Acorns, I mean, just put it in your brokerage account. That's all I got to say. Like every month, just put a certain amount in every month. Acorns, it's kind of weird to me, but Robinhood has had some issues, some crashes on their site.
Really?
on big volume days. So when a lot of people are trading in and out, they've had crashes and people can't access their money, or they're getting somehow fraud-related issues. So money's being taken out of their account for no reason. They can't get it back. So there's been some issues with Robinhood for sure.
Yeah.
But yeah, with Fidelity, I've had no issues. Vanguard, they're kind of like an older, harder to use platform, I'd say. You got to call them still on certain things. Fidelity, you don't. M1 Finance is a newer one, which I think a lot more people are using. But yeah, Robinhood has had their issues, so I'd probably recommend not going there.
Got it.
I personally wouldn't go there. So,
do you use an app on your phone to check it when you're not by your computer? How do you stay up to date on what your account's doing, or do you really need to
so
check
I got the iPhone, so I just use their stock tracker app, and then I use my Fidelity. Just you can go on your phone app through them, and you can see how your account's doing. And then I just use Google for everything else. If I got to search the ticker and news related things, I'll just Google it.
So would you say as you're investing, it's somewhat of a retirement account for you, because you're not planning on touching it for a long time? Is that eventually when you want to start using it, or at what point do you?
Yeah, I mean, I'll get to a certain level or certain price, amount that I want to have, and then I'll draw about 3% out. That's it's usually the rule. 4% was the old rule that you can, so that you can take out the money and it won't affect your account. But I'd say 3 is the better number because of inflation and whatnot. But yeah, at a certain time, certain age, I'll probably start taking 3% out, and then that will sustain me with my lifestyle. That's what I'm hoping, at least.
Yeah, so. And I mean, right now you have a job, but I mean, it's when you reach that number. It's not like when I'm saying retirement.
Yeah,
that might be 35 or 30 years old, right?
Yep.
So it's going to be working the 9 to 5 is not necessarily a long-term thing by any means.
Well, for me personally, I just don't want to have that need to go out there and just, I have to work today. I have to do this.
Yeah.
Like, I want to be like, okay, I'm going to do this today. I'm going to do that today. I don't need to do that. I don't need to go out and work. Like, I'm already having income coming in.
Mm-hmm.
And so that's like the level I want to be at. You see your parents or you see other people in your life and it's like they're working until like 60 and they're still struggling. It's like, no, I don't want to be that. I want to get to a certain level, I want to retire, and I want to do what I want. I'll do the work that I like to do.
Mm-hmm.
That's kind of where I want to be.
You think you're going to get there a lot sooner because you're an active investor as opposed to just being passive, or does it?
I think so. Yeah. Yeah, I think you can make significantly a lot more actively investing than you can passively, in my opinion.
Yeah.
Because you're always staying up to date. You're always looking at different trends, doing social arbitrage. So that's where you're seeing trends in the market, and you can't really do that if you're not actively looking for it. If you know what I mean.
For sure.
You can still make a ton of money over time passively, but you just got to be consistent on your payments into your accounts every single month. So
someone who's working for,
Yep.
a company or their job, how much of their money should they be spending in their retirement plans versus going into individual stocks and kind of taking things into their own hands? Do you recommend just completely doing it on your own, or do you use your work's 401k, and how do you go about that process?
Well,
how would you recommend?
So with my former job, I was going through a 401k, and I was like, why am I so limited on my choices in my 401k? Like, I wanted to actively invest in stocks, like not mutual funds. And so when I got laid off of that job, I took that 401k, and this year I've doubled it so far. And so that's kind of like where I'm at. Like, it doesn't make sense to have your money in a 401k. Just do it yourself. If you know how to do it, just do it yourself. You save more money and you can grow it faster.
Yeah, that's the key. You got to know. You got to have the skill set and the faith in yourself to be able to.
Yeah, that's a big one. You got to have faith.
Otherwise, you're just going to lose it all, and people are worried because that's a lot safer, right? Lower risk probably to have somebody else do it, but they're going to be taking a lot more.
But you're also taking a risk on losing out on potential money. So that's where I'm at. I'm like, okay, I'm going to take that risk as I can, and I'm going to grow my money faster in my own hands. And so, yeah, 401k, I mean, with people who don't really have that skill or the want or drive to do it, okay, yeah, if your employer's matching you, put the employer match and then put the rest into a Roth IRA. So then your money's non-taxable when you retire.
Yeah.
Like, the Roth is like the best thing ever. I mean, the government made that so that people could retire better without getting taxed on their money when they take it out.
I learned about the Roth IRA from you when you posted it. I hadn't been thinking about it at all, and then I'd been following you, and then you made that whole explanation. Wait, that's real? That's a thing you can do?
Yeah. I was talking to my mom about that, and she was like, "You're lying." I'm like, "No, it's a real thing. The government made that for that reason, to make it better on you."
Yeah. Okay, so your personal account, you've taken it completely into your own hands. People are really scared about losing. How much have you lost at one time? What was your biggest loss ever?
Well, it wasn't. I wouldn't say it was a realized loss. It was a potential loss.
Okay.
So I bought Tesla back in what was it? Early 2019, and I had a good amount in that. And when this pandemic hit, I sold that, and I sold Square. It was like my worst decision to date is to sell that. I still made 200% of my money, but it 10x'd this year, and I would have made so much money off that. So I would say that is my biggest loss, is selling Tesla early. I sold it for a gain, don't get me wrong, but that realized potential that I could have had, oh my God.
Because is that more of swing trading then at that point when you sold it?
No, I that was a long-term trade.
Okay.
I held it early 2019 or maybe 18, and then I sold it in April, I think. just because I needed to free up cash, and I was like, okay, I don't know what Tesla's gonna do. I didn't know at the time, but I had a gut feeling. It's like, just keep it in. But then my mind was like, no, you need to sell it. You need to get cash now. That was the worst decision ever. So now I've learned, and I think many people will learn that problem. It's like, okay, you're in panic mode. Your mind's telling you something that you need to sell it, but your gut's telling you the total opposite. Go with your gut instead.
Really?
Yeah, your gut is always going to be right. I've learned that multiple times.
Maybe it's just your gut's right, and other people's just gonna get them in the hole.
It could
no.
be.
No, it's probably you're probably right. You gotta.
Your mind's always second guessing you, yeah. But yeah, your intuition, your gut is gonna tell you the right thing. Because I mean, if you looked into the company long enough, and you have, you've looked into leadership, you've looked into everything that you possibly can, and you understand it fully, and the company's just going up, and then your mind's telling you, oh, okay, you got to get out. It's going to sell off or whatnot. Don't do that.
You gotta almost completely detach your emotions from your portfolio.
Yeah, that's what you got to do. That's what I've learned. Just keep it in.
It's hard because the bigger it gets, you probably get more attached to it. You don't care about $50, but then when you got 160
there,
it changes a little bit.
Well, it's just going to be pennies compared to what it's going to be. So that's the way I look at it. Just take the risk now.
Right there. So Tesla, you mentioned that they're already, pretty high market cap, but as far as what they're doing, it seems like
they're going to be like a $2 trillion company. They're going into so many fields that are coming up. Like they're going to take over Uber. They're going to probably merge with SpaceX at some point.
Because they're both the same guy's company.
Yeah, and I mean Tesla's going to be Elon's going to be sending up satellites to have, autonomous satellite coverage like throughout the whole world at some point. So you think with the autonomous Tesla, self-driven, no one's going to be occupied, and you can rent that out. And then they have their solar business. It's like they have so many avenues: battery storage and mining. I mean, you got everything you'd want in Tesla. It's, they're probably going to 4X from here. So probably going to be like where Amazon is at some point.
That is nuts. I mean,
Elon is he's the man. Like he's going to surpass Bezos at some point.
You think?
Mm-hmm. Yeah, I think he's halfway there, or more than halfway.
Because Bezos is
He's the second richest person in the world right now.
Yeah, but Bezos is on track to be a trillionaire soon. Then you think
Elon's
going to just
4X
him?
Oh yeah. If Tesla goes like $2 trillion, it's game over.
Yeah, that could turn into a weird.
They just have so many avenues. I mean, they're barely, taking off like where they're going to be at, in probably 10 years.
Yeah, it's one of those things that companies like the big companies that do well, Apple or the other ones. I
think it all comes down to leadership. I mean, you got these visionary guys, put Elon into, Steve Jobs, into Warren Buffett, into a Jeff Bezos, all in one. Yeah. That guy's it.
Yeah, it's just a once in a generation opportunity to get a mind like that.
Yeah.
So with the investments you have right now, it's primarily the stock market, correct?
Oh yeah, it's all stocks.
Do you plan on diversifying that with real estate or branching out anywhere else?
Definitely real estate's coming up. Mm-hmm. I mean, once I get to a certain level in my portfolio, I'll probably, take some of those profits and put them into real estate and rent them out or, live in them and just 1091 exchange. So, real estate's definitely, I think, going to be there eventually in the future. Is
that going to be in this area?
Who knows?
Snohomish County, yeah. You said you were thinking about heading over
Might be
to
Texas.
Tejas.
Yeah.
Man, I think right now if I could pick a spot to live, it'd be there. I went there it's like a spring break or something.
How'd you like it?
It was so cool, man. We went on the boat and.
Did you go to Lake Travis? Where were you at?
Austin. We were in Austin, Texas, but there's those two lakes. There's like Austin and Travis. I think we were in Austin, but I forget. But either way,
one. It's beautiful, right?
All along the side. Just the town is cool.
Yeah, it's good. It's a good vibe, and it's affordable there. I have a buddy who lives there, and it's like it's like pennies compared to here. Here is just astronomical, real estate wise, and just living wise, prices wise. I mean, everything over there is pretty affordable, I'd say. But I mean, real estate could be anywhere at this point. But I mean, I want to get my hands into it for sure.
What would you say is the base? Like, how much money does somebody need to start investing? Could they start with $100, or would you recommend saving enough first and then investing, or just going straight in with the first $5 you get or whatever?
I mean, you can start with next to nothing, and you just got to be consistent. You just got every single month. You just got to buy, and just buy on red days. I mean, even if you only have like $100, buy on a red day, you're gonna make money on a green day. So, I mean, yeah, with small amounts, big amounts, doesn't matter. Just get started as early as you can.
What are some stocks right now that you feel are underpriced, or do you not want to give those secrets up? It's okay if you don't.
I would say Planet 13, and I'd say Very Good Foods. There's not a lot that are at good prices, I'd say, right now. I mean, there are definitely some stocks out there that are, but I think the time will come in the near future for some red days.
Yeah.
Yeah.
Is now a good time to start getting into investing?
Anytime.
Anytime you don't time it, just as timing the market over timing the market.
Yeah. Seriously, you just dollar cost average. I mean, you just buy in every single month. And there's a guy on YouTube, Graham Stephan. That's what he does.
Yeah, I follow him.
Every single month. He just puts money in index funds. He's he's got stocks, but he's majority index funds. He's a real estate dude. So, he just buys in every single month, and he's outperformed the market. So
that dude makes bags off YouTube.
No,
That's
he makes
crazy how much he makes. I just saw one of his videos.
Yeah, he has like 2.4 million followers.
Yeah.
Subscribers.
That's nuts. It's a lot of.
And then in the financial space, they have the best CPM. So it's like the rates are astronomical for them.
That's so cool. All right. I have some questions from
let's bring them up.
People from Instagram. Let me see here. They're actually on my phone, but I think I can get to them from my Instagram here. Sorry, I gotta remember how to get to this.
Got to get to the other page.
Yeah, I'm not very good at this. Let's see. Hold on. Loading. Shoot, hold on. Do you know how to get to the questions from... I think it might be in my archives.
I got a text I can bring up.
I got him.
There we go.
All right. Riley Nelson, financial advisor, actually, that I just interviewed, asks, growth or value or both?
You definitely find stocks in both. Value, I'd say if you're looking at value stocks, say like a Coca-Cola or Berkshire Hathaway or Tesla or whatever, I'd say just buy on a big red day. Growth, I'm personally a growth investor, so I'm buying companies that are growing at 50 to 100% a year or more. So those are growth stocks. But value plays, I mean, you can get the dividends. So I just bought Costco because they're giving $10 a share out for a special dividend, and they rarely do that, or they sometimes do that. So I was like, okay, that's a good play. Costco is a good company. It's definitely going to keep growing and growing. So I just bought that, give me the dividend, and just hold it. So that's a value play. You can find stocks in both, I guess.
That's awesome. Okay.
Yeah.
Right on. J.R. Baker says, we kind of already mentioned this, Robinhood, yes or no?
personally, I'm not a fan of it, but I mean, it's not that bad. So
works for some people.
Works for some people, yeah. It's easy to use on definitely like options is easy to use.
Yeah.
Yep.
All right, Chelsea Wiersma.
Sister.
Yep. We kind of mentioned this, but what's the best way for beginners to learn? Is there a question? YouTube.
Interviews with people you're familiar with, like Warren Buffett or like a Bill Gates or Elon Musk or any of these guys, CEOs of companies. Just look up interviews on YouTube or go into the financial space on YouTube, and that's where I get started.
Yeah, well, I listen to a lot of podcasts. That's been helping me.
Yeah, the Bigger Pockets podcast is a good one. Average Money podcast, that's JJ Buckner's.
Oh yeah.
So that's a good one to go.
Or just interview stock investors. You can learn.
Yep, that works too.
All right, let's see. I'm not sure the name. It says dnd.dill. Says pay the higher price for Tesla or invest cheaper in Neo and Li Auto.
I'd say buy Tesla. Neo and the other both Chinese stocks, so the government has a lot of say in what they do. So I'm not a big fan of Chinese companies in general. I mean, there's a ton of growth in China, but I would focus on U.S.-based companies like majority of the time.
Mm-hmm.
And Canada. I'm a big investor in Canada now. There's a lot of companies coming out of Vancouver right now.
Really?
That I'm finding.
Why is that? Just random?
They're innovation hub, apparently.
Huh.
Yeah, very small, innovative companies coming up through Vancouver. So I like Canada and I like U.S., but not a fan of China.
Yeah, me either.
No.
Communists.
Goddamn communists.
D&D.dill also says, why invest in stocks and not just put all my money into a Roth IRA account?
Well, a Roth IRA account is just a holding spot to buy stocks.
Mm-hmm.
So you're buying stocks in that and in a brokerage account. So
yeah, so it's kind of just a matter of where you're doing it.
Yeah.
425.Dylan says, did you take classes related to finance or are you self-taught? How did you get into investing? I mean, we kind of covered that completely.
Yeah, so, definitely self-taught.
Yeah. Which, I mean, hopefully soon you're going to have a YouTube where you can just find a top to bottom idea of just everything about the stock market, man. You're going to blow up, I know, if you started a...
It's in the works, man. It's in the works. You heard it here first. It's in the works.
Monsidic says, I also interviewed him,
okay.
if you saw.
Which one was he?
He's a mechanical engineer. He started the Frost app.
Yeah.
He says, what disadvantage am I at if I don't know anything about stocks 5 years from now?
Well, I'd say get on it right now because, the younger you are, the more you can make. Compound interest. That's what I'd say. Just if you're interested and if you're not sure, just learn. Mm-hmm. Google it, YouTube. That's the key.
Yeah, I agree. I mean, I'm still doing my best to learn, and I got a Roth IRA account.
You're doing a good job. You're interviewing the right people. So
yeah, that's where I'm at. I'm in the researching phase. You, Warren Buffett, basically the same thing. So except I get to talk to you, so it's a little better.
A little easier.
Yeah. Cool, man. Is there a book that you recommend to people?
Honestly, I'm not a big book reader.
Mm-hmm.
More of like audio and visual. I've always been like reading. I've never couldn't focus on it. Mm-hmm. But like with audio and visual, like interviews like this, I learn a lot more. So I'd just say. Just watch YouTube guys, finance guys.
There's more information in total than any book can give you.
Yeah. Gives you a lot more.
As far as investing books, like about the stock market specifically, I mean, there's a lot of self-help books. I mean, Rich Dad, Poor Dad probably is where everyone should start. And then like Think and Grow Rich, I'm a fan of those. But I'm sure there's tons out there. I've never read a specific book about investing in the stock market. So yeah, I'm actually not sure if there's a really well-renowned one, but it'd be worth looking into. But YouTube, probably the best.
No,
point.
YouTube, you can go in depth on any subject you'd ever want.
Mm-hmm.
And then Investopedia. I mean, that's like read. I read. Okay, so I do read. I read news.
Okay.
I mean, I read the Wall Street Journal. I read Investopedia for terms. I read earnings reports. I read press releases. Like I read. I do read a ton, but I don't read books.
Yeah.
I mean, I probably should, but that's just not how my brain works. So I rather listen to people and look up things.
Which is working for you, so
Yeah, I mean,
more power to you.
I mean, yeah. If you're a reader, avid reader, I mean, look up just renowned people in this space, and just see if they have a book or if they've read something that they'd recommend. I know, like Warren Buffett, he reads a lot. He has some books that he's read. I know one of the Facebook founders, he reads a lot. He's got some books. Gary Vee, Crush It, that's a good book. Tony Robbins, I think it's Unthinkable. That's a good one. He has a couple. But yeah, there's multiple people out there who have some good books, have some good terms.
Sweet. And kind of wrapping things up, I always like to ask the question, how do you define wealth for the Get Wealth podcast? What's your definition of wealth?
I'd say just the ability to do what you want. Mm-hmm. That's wealth. And have the people that you love surrounded with you, and you can do things on your terms. Mm-hmm. So that's wealth. Yeah. If you have the money to have that and the ability to live life like that, like that's wealth.
Yeah, I agree. And the sooner you can do that, the better. Which is
exactly
where you shooting for, right? You said next.
Hopefully, in my 30s. I'll be good to go.
That's awesome. I'm gonna have to do another interview with you.
Yeah, I'm always down.
That's so cool. All right. Any future plans, business investments, things you got in the coming future you want to talk about, or any? Yeah.
I mean, I would love to get in real estate, but I'm super focused on just building my stock portfolio. That's my biggest one. YouTube definitely is in the works, so I'm gonna stick with those three.
That's awesome.
Yeah. How about you?
Me? Yeah, I'm doing my best with this YouTube channel, Get Wealth. I'm in the near future hopefully going to be putting it on the other platforms like Anchor and Spotify and Apple Podcasts, whatever. I don't even know what it's called. And then got the whole aviation stuff going on, so that's kind of my main focus right now.
What are you trying to do with that?
Well, the airlines is
trying to be a commercial pilot, or are you trying to be like a guide, like out in the middle of nowhere? You're flying people different places.
Yeah, my plan since I started has been to be a glorified bus driver.
Nice.
For SkyWest or who knows. But more recently, I don't know, I'm kind of changing my perspective a little bit.
Exotic flying.
Yeah, I mean, if you get some pretty good corporate gigs out there, you can spend a week in Cabo flying some rich guy around. That's not always bad.
It's not a bad gig.
And through the pandemic, they have actually done pretty good. Because rich people still need to get places, whereas the airlines
charge at a premium, probably.
Mm-hmm. Yeah. So I got a lot of buddies that are doing corporate right now.
How much longer did you have?
Right now, let's see. So I'm probably going to flight instruct for around 2 years from about starting in January.
Okay.
Because I signed a contract and do that until I get to my 1,000 hours, and if the airlines are ready to take me by then, I'll do that. And, from there it's just who knows, but yeah, the
sky's the limit.
Yeah, literally.
Literally.
Yeah. So that's what I got going on, but who knows? Life's crazy. Maybe I'll get into flying corporate and invest in stocks more, real estate. I definitely want to get in real estate, but I don't have the means to do that yet.
Yeah. I mean, you can definitely get in real estate for next to nothing, pretty much. There's ways to do it.
Yeah, I get worried about debt. I got a lot of it right now with school.
I hate debt. I hate owing people money.
Yeah, not the best. Well, where can people find you? Like Instagram?
Instagram is my primary, probably Grindie Stocks, just all one word. And I'll be on there, all the time. If you want to message me or leave me a comment on my post. Yeah, feel free.
You're super willing to talk to people. I've reached out to you before, and
I'm always willing.
Very helpful.
Yeah,
and I appreciate you coming on the Get Wealth podcast today. I feel like I learned a lot.
Thanks for having me.
Anyone that watches this definitely is better off than they were before. So awesome, man! Thanks for coming on.
Yeah.
Get Wealth, everybody.
Cool.